then they are stuck. They're like, I've heard this was a great idea to get 0% cards, but now it's ruined my credit.
Level up your mind, your grind, your game. Awesomely is the name.
Hey, welcome to Awesomely, where we help you live awesomely, learn it, earn it, and live life wide open. It gives me great pleasure and makes me very happy to welcome to this conversation the one and only Ari Page, founder and CEO of Fund&Grow. And you guys have been around since what, 2007, man? Is that right?
Yes, I believe we were incorporated 2008.
It's been a minute. Yeah, that's Patrick and I, the very first version of our company was 2012. So you are our seniors in this space. Man, I really appreciate you just giving me a few minutes to have this conversation. I really love every one of these that I get to have, and just peel the onion back a layer or two to get a better understanding of you and what you guys do for us and for people like us in the real estate investing world. And also, you know, the biggest mistakes that you see new investors making and how to avoid them. Fund&Grow. I'm just going to be completely transparent with everybody who's here. Ari and I have been in the same industry and spaces for some time now. We've known about each other, known each other a little bit, but I've just never actually had a real conversation to really get a personal firsthand understanding of exactly what they offer, what they do. And I've heard a lot of people talking about them. I've heard some great successes. My understanding is that you guys have really mastered the business, entrepreneur, investors, business credit world, right? You know how to facilitate a short connection to, I believe, 0% interest credit without the hurdles of traditional financing. Is that right? Am I getting that right?
That's right.
Okay.
It sounds crazy to people.
It does. So I'm gonna have you prove it here in just a second. Take me a layer or two under the onion. But I would like to know first, I'm just curious about stories. What's the origin story of Fund&Grow? It's probably personal to you. I don't even know. How did this thing get started in the first place?
Oh, that's a great question, because back in 2006, 2007, I was working with my mentor at the time. His name was Dave Candle, and he ran a company called Loan Pro Financial, which was a mortgage company. And so I was learning from Dave, and what was happening at the time was that the mortgage market, as we know, was starting to dry up. The loan to value amounts were dropping. People had X amount of cash, they had 10% down, 20% down, but it was shifting quickly. We were serving business clients at the time with commercial mortgages. And so we were seeing the LTV amounts drop 10%, 20%, 30%. And we were finding ways of coming up with stopgap money to pay that difference, to help the business with that difference. We found that we could apply and get access to and use business credit cards to fill that gap. And we were able to get, at the time, hundreds of thousands of dollars very quickly, and even do cash advances directly off the cards with no cash advance fee, just a $75 simple fee. At the time, you could do that.
Wow.
They would just move the money right from the credit card to your business checking account. And it was a great time. At the time, we were offering up to $500,000 of business credit cards because they were just giving out huge limits. And this has been a tool that has been continued to be preferred by lenders, because with the more regulated loans like HELOCs, business lines of credit, mortgages, there's a lot more red tape. It's a lot more costly for the bank to do that type of business. There's a huge amount of due diligence that costs the bank massive amounts of money that simply doesn't exist with business credit cards. Business credit cards are not regulated the same way. It's much easier for the bank to use. And the bank is offering these with a 0% introductory amount, which is bringing in a specific type of clientele. That clientele is ones that they then want to target for insurance and a whole variety of other business services. So we found that the mortgage loans wasn't near as exciting and wasn't offering to small businesses near as much as what could be offered through business credit cards. So as the markets were crashing in 2008 and 2009 timeframe, that's when we retooled and created a business credit card stacking company. And we
You're like,
were,
we discovered something really special here,
yeah,
but it's a secret. None of my colleagues out here understand this. There's a business idea.
exactly,
Classic
exactly.
entrepreneur right there.
And we were charging $1,500 an hour at the time. And it could take anywhere from 10 to 15 hours
Oh,
per client. So we were loving it. We were just absolutely loving it.
yeah,
But we were
man.
working with a couple affiliates that had been referring mortgage loans. And they were like, listen, guys, when you have a loan product like this, you can't just unendlessly charge $1,500 an hour and charge clients. You have to create a package out of this. So today we have a $4,000 package where for $4,000, you're basically prepaying for the credit that you're going to get if you qualify. So you have to go through our qualification tool, which is a soft pull. It looks at your report, and then it lets you know how much business funding you qualify for. But instead of charging like many of these other companies do, 10%, 15% of the total amount of credit that they get. By the way, many of these companies do that. They charge up to, we've seen 18, 19% for just to get you approved for business credit cards. And so we figured out a way of creating a package where we're not charging a percentage basis. We do have a program where we charge clients 8%, and that's the max that we charge, 8%. But if you don't want to pay as you go and you don't want to pay that 8%, we've condensed it down into our membership. And our membership is to cap that fee. We want to cap that fee so that you're not paying anywhere close to that.
Okay.
For $3,000 or $4,000, we can easily do the service for you and get you access to a lot of business credit cards. And so since we kind of stumbled upon this credit card stacking process back in 2007, 2008, it's really taken off like wildfire. There's a whole lot of companies out there that have been replicating what we're doing, but they're not doing things like looking at the client's credit ahead of time, doing pre-qualifications, integrating those processes with other companies. For example, we work with quite a few other companies that as their leads come in, it hits our API and the client gets pre-qualified, and the client is able to, or the lead is able to see what they qualify for before they even get started on the affiliates program or on any program. So it's just a great way of being able to qualify someone and get them into funding. And our mission is to get as many small businesses funded as possible. We've hit 30,000 so far, but our goal is to hit 100,000 in the next few years.
You've helped 30,000 small businesses follow this path that you accidentally stumbled on.
Yes.
Wow. And
We're
the
very
time
proud
of
of
recording
that.
this in 2025, I mean, that's obviously you're still in growth mode. And so if you're watching this in the future, the number is going to be much higher, but that is very impressive. It really is. So I have a question though, that maybe others might be thinking. What, in your experience, what is the possibility that someone will engage your package at a $3,000 or $4,000 level, only to find out that they're just declined, they can't get business credit, and then they have a sunk cost and they walk away empty-handed? Does that ever happen?
That's not going to happen because we pre-qualify someone ahead of time. You can't buy our service if you don't qualify. So
That's the soft pull, I guess, that you on their credit,
exactly,
where you make sure
yeah.
that they pass the initial sniff
But now,
test, so they're going to get approved for something.
Yes. Now we do run into issues that new investors have where they may have run into credit card stacking before, or they may have taken the idea on their own and applied for a whole bunch of personal credit cards. We have clients that come to us, they've either worked with other companies or they went out on their own and they applied for all these. They were like, I was told to get the 0% credit card. So they go and they apply for all these personal credit cards. Then they ring them up spending on their business without realizing that when you max out personal credit cards versus business credit cards, when you max out a personal credit card, you are going to tank your score. So you can't continue the card stacking process. The card stacking process is how we keep it at 0%. So it's critical that we set this up the right way, not the wrong way. The right way would be that we're using business credit cards that report to the EIN number, the tax ID number of the business. In that instance, none of the credit is going to report to the personal credit. so you can utilize the entirety of the credit card without it affecting and pulling down your personal scores. So a little tip for our listeners is that if I have a personal credit card and I use more than 35% of that card, so on a $10,000 card, if I put more than $3,500 on a $10,000 card, I'm exceeding the 35% ratio. That 35% ratio is a ratio about the limit to the amount of debt on that particular card. And if I go above 35%, my personal credit scores go down. When my personal credit scores go down because of heavy balances on a credit card, it precludes me from being able to move forward and get more business credit cards, to be able to get more 0% cards. However, if instead I'm using business credit cards that report to the EIN number of the business, they stay off my personal scores. My personal reports stay nice and high, which makes it easy to go back for batch after batch. We call it batch. You could call it like a card stacking round, where we're going to apply for 4 or 5 of these micro loans, these credit cards at the same time. And then we're going to help the client with the negotiation process, maximizing that, getting anywhere up to 250,000 over a 12-month period of time.
Wow. Okay. So I think that this is highly interesting for a lot of people, but I think it could be helpful to bring it back to a specific examples of people that you've worked with. If you can just recall off the top of your head, I know you didn't prepare for this, but can you give me some examples of the, we'll just call them, regular mom and pop investor who engages your company for business credit, exactly as you just described. How have you seen a person like that? Like, what have they been able to accomplish and get in terms of business credit? How have they used it to accelerate their business in some way? Do you have any stories like that
Yeah,
top of mind that can connect the
absolutely.
dots for people?
Who was the lady I just interviewed?
Katie King.
Katie. Yeah, so Katie King from the Cincinnati area. We met her through an affiliate called Nate Barger, and he teaches people the Burr method.
Okay.
And she received, how much funding did she receive?
Like 98,000 in the first batch.
98,000 in the first, but it was, and
She's working into the second batch.
okay. So she just got started with the program, and I just finished doing a video. That's what I'm asking the producer. We just finished recording a video the other day about it, and so we're going to be posting that pretty soon. And so she explains her whole experience with the process. And essentially, she's a real estate investor. She got started. She's received 98,000 in credit cards so far, and that's only on her first round of funding. So that's within the first couple months. She's received 98,000. Now our team's working with her to help with the third-party payment services to show her, how do I use these business credit cards to pay for escrow, to pay contractors, to pay for all the things that my business needs, whether it be marketing and advertising, whether it be payroll. All of those things can be paid for using a business credit card so that it earns you cash back. JP, how many loans do we have access to that give us something back? When I use a mortgage, does it give back to me? No, I have to pay a payment. When I use a hard money loan, do they give a percentage back to me like, hey, here's your kickback, JP? No. If I use an auto loan, do they? No. The only loan that will give you something back is a credit card. And business credit cards will give you up to 2% cash back. We have many clients, including us, where we could easily spend, Fund&Grow could spend $50,000 a month, $100,000 a month on our business credit card. All of that becomes cash back that we're receiving. We receive 2% cash back on spending that we have to do. We're not making up spending to get a tiny bit of cash back. This is spending that we're forced to do anyway. Spending on marketing, on our facilities, from electric bill, phone,
Yeah.
all of these different things, you're forced to spend on it. Why are you not receiving 2% cash back? By using a business credit card. So it gives you easy access to a lot of credit that doesn't appear on your report. You get cash back from it. And very important for real estate investors or any small business owner is your ability to stay in the driver's seat when you're purchasing. Business credit cards allow you to charge back. We've had real estate clients that were putting a new roof on, and the roof didn't pass inspection. The contractor screwed up. It wasn't passing inspection. They didn't care about our client's timetable, of course. And so until the client went and charged back, they called us. They were like, what do you do? Call your credit card company and tell them what's going on. They did. They charged back. And the roofing company was calling them back the next day. As soon as that chargeback hit their merchant account, the roofing company was calling them to finish the job. So it's a form of asset protection.
Interesting. Hadn't thought of that, but yeah.
Now we also have clients that are outside of real estate. Now, Katie was just in her first round. She received 98,000. We have clients that easily surpass 250,000 in funding because they have very good credit. So if someone has a horrible low credit score and it barely qualifies, then they're going to get on the lower end. But if they have a great credit score, then they're like, for example, Katie, she's easily going to get 250, if not more, over the life of the program. She got 100 grand just in the first couple of months. So then we have Marlee Brodsky. And you can go onto our YouTube channel or onto my Facebook and you can see a beautiful interview that we just did with that Fund&Grow client. She's in the medical space where she actually helps people with, let's say that you have a loved one that's gotten sick and they're in the hospital and you're having to interact with doctors. You have your family trying to talk to you about it. You're interacting with the health insurance companies. You have all of these different things going on. And here you are thinking about your loved one. So she's created this program where they interact with the health insurance company for you. They interact with the doctor for you. They don't let you get charged the way that they're going to charge your PPO instead of charging the way that an HMO should be charged so that you get screwed. They interpret everything for you, and they can show savings of like $50,000, $100,000 easily just on one person getting sick, and helping with the family, helping them explain and understanding it so that they're not being charged out, just crazy amounts of money. And so this was a crazy business model I've never even heard of. And it happened because her grandfather got sick. And so they were dealing with exactly this. And her husband is a doctor and she's in the medical space as well. So all of that swirled around and they created this amazing idea. And she received, I think, what was she at, 300,000? So she had received 300,000 in funding. And so just off the top, I wish I had some things written down. But
that was it off the top of your head, man. That's awesome. That's awesome.
Most of our clients are in real estate, but we do have people in e-commerce and brick and mortars and everything else.
I've got a question engine in my head that when it gets turned on, the questions just keep coming and coming, and I'm resisting the temptation to just keep going because I got to pull out of this for a minute because this video I don't want it to be too long, but I really appreciate you giving us a really compelling summary of what you do for real estate investors in the world that we both share. And I really appreciate you giving me a couple of examples of the real stories. I'd be remiss if I didn't ask, what are the downsides? And actually, let me ask that a better way. What are the potential risks or gotchas in your experience working with people that they need to be aware of and watch out for when they do this?
Well, everybody believes in their business model, and everyone really believes that their idea is literally just the best idea when it comes to business. However, I really encourage and caution small businesses to do their due diligence before getting $250,000 and investing it. Now, we've seen people get $250,000 from places like Shark Tank where they're giving up 50% of their business or even more, and it's a bad idea. And so I recommend that when an investor is getting ready to invest other people's money or money from a loan, that you really, really, really have done your due diligence on your deals and on your projects and what it is that you're working on. So being responsible and wise is great advice that a company that gets funding can give for those that are investing that funding. But we do from time to time, we go through and we look at our past clients and do surveys to find out where's their credit like? What's their credit like? Are they bankrupted? Are they doing well? And the absolutely crazy thing is, after we surveyed 1,000 clients, and I forget, this was last year, and I forget how far back we went, we found 3% of them had some type of negative ding on their credit report. 3% of our clients. So a solid 97% of them are moving forward.
Yeah.
They're growing their business. There is a very small percentage of people that will fail, and they're going to fail probably no matter what. With $1 million loan, they would have failed. With a $250,000 loan, they'd failed. Probably with a $25,000 loan, they
Yeah.
would have failed.
Yeah. Some people just don't have the
But
stuff to handle that money when they have it in their hands.
yeah, and then on the flip side, there's some people that would succeed even if you only gave them $25,000 loan.
Right.
They would succeed. They'd make it work.
What's the biggest mistake that you see in the wild people make, new investors specifically, with this concept, with funding and business credit? What's the biggest mistake, hands down?
The biggest mistake is them going out and applying for personal credit cards, ringing them up, and not being able to refinance out of it. Then they are stuck. They're like, I've heard this was a great idea to get 0% cards, but now it's ruined my credit. And what we speak about is getting people business credit cards at 0%, credit cards that are going to report to the entity. So it's a very big difference. We're not advocates of just going out and getting huge amounts of personal credit cards and ringing it up so that you have low credit scores and you can never refinance and do the credit card stacking process. That's the biggest problem that we see from our little niche, from our perspective, when people are coming to us, where they're like, whoa, I wish I'd met you before XYZ company that only applies for personal credit cards for people, because it is an extra step. It is a lot of extra work to make sure that the entity is set up, to do all the due diligence that surrounds that with the Secretary of State, to make sure that it's something that the banks want to lend to. And we help usher the client through all of that to make sure that they're highly lendable. When the bank looks at them, that they want to lend to them, that their entity, their business isn't something stopping the lending from happening. So if they have good credit, it pretty much guarantees they'll be able to get funding.
Man, amazing. Thank you, Ari. I appreciate you, man. Fund and grow. You guys, if it's something that you have a need, you need capital, you need more money for your deals, more money for whatever your real estate investing or entrepreneurial activities are, and you'd like to look into getting 0% interest business credit without any of the hurdles of traditional bank loans, you got to check them out. There'll be a link if you're watching this on YouTube, it'll be in the video description. If you're watching on the blog, then just look on the blog. It'll be there. Thank you, Ari. Appreciate you, man.
Thank you, JP.